Hey, howdy, everybody. Tony here. Hope you're doing well. When Sam's away, the senseis will play. So this week, I'm going to be taking a stab at the Friday video. I'm going to be looking at Bitcoin. I'm going to start at the weekly and work my way in. Not going to go into too much detail. I'm sure Sam's been through everything nice and thoroughly. So just going to give my thoughts and some interesting things that I've been pondering and looking at. Sam will be back Wednesday for the live stream. So if you haven't watched those or take part in those, you definitely should. He takes members' charts from the Discord and goes over them, gives his thoughts, applies the TDU method to the tickers or the charts. You should check that out or take part of it every Wednesday. And then he'll be back on Friday to button up any cliffhangers he left you guys last week. If you're a returning member or subscriber, we thank you very much for your support. If you're new to this and trying to figure out exactly what it is I'm doing throughout this video, I definitely recommend coming and checking out TradeDevils University here at TradeDevils.com. And even if you are a returning member or subscriber, we've done a little bit of revamping in here. We've made things a little bit easier to get into and affordable, be a part of the belt system so you can learn all about these markets and how we do our analysis. We have a free belt course here, the white belt. You can take part in, see if you like it. If you like it and you want to learn more, you can carry on to the other belts. And of course, come check out our socials, YouTube, X, TradingView, all that good stuff. Where I'm limited to 240 characters, which after this video, I think is not such a bad thing. Check out our other Sensei PK as well. Now, without further ado, let's go ahead and dive into the Bitcoin analysis. All right, so just starting out here on the naked chart on the weekly. Not going to go and deep dive into too much of this stuff. We've all been looking at this for quite a while. We've all counted it every single way we can kind of think of. So just looking at it, I think we have a nice impulsive move up here. The only thing that isn't really typical is having the flat in the wave 2 and the sharp in the wave 4. It's not a deal breaker for an impulse by any means, but something that's a little bit unusual. I'm going to go ahead and bring my count on here so we can see what I'm thinking and go from there. Right now, all these lines and numbers and letters just basically say I think we're following the rules and guidelines of Elliott Wave Theory pretty good so far. The biggest thing I want to point out here is my invalidation point. At this juncture, I have this as my orthodox end of the wave 4. We could move it up a little bit to the 52 area here, but right now I'm considering this to be the orthodox end of the wave 4. And why is that important? In impulsive waves, the only time we can really know for sure that the wave 5 is complete is if it invalidates. Where that invalidates is at the orthodox end of the wave 4. So right now, according to this count, and again, this is my opinion for now, and when we dive in, I might change my opinion, but for right now, I'm using this as the orthodox end of the wave 4. So anything that happens kind of in between this range here could all still be part of a larger degree move up. Could be 1, 2, 3, 4, 5 of a 1, and then we're heading further up. So right now, just looking at this is where the largest degree that I'm looking at here, impulse, invalidates. Obviously, we want to be out of here and walk away with our ball and our bag of money before it even gets near there. But right now, speculation can go wild within this range, and it's a $50,000 range. So is it going to extend? Again, we're going to have to wait for the PA to tell us what's going on. But right now, I think the most conservative count is that we're going to be ending here in the 5th wave for a potential of a larger degree correction. I tend to lean more on the conservative side just because when I'm in trading these waves and trading these moves, I want to be out way before this thing even hits the wave 5. It's fun to hit turns and catch pivots and all that, and you can do that. But the conservative end is you really want to be out of this move by now. At these larger degrees, of course, we can push things a little bit further. But if this was on like the 5-minute or the 1-minute or the 15-minute, I'm pretty confident if I caught this whole wave, I'm going to be confident and fine with taking the profit here and walking away. Right now, I think we do have more room for a move up here. I do have the wave 5 most likely targets for the larger degree and the smaller degree kind of in this box. But once we figure out if this is a wave 4 and when the wave 4 completes, we're going to have a much better idea of where we're going to end up potentially up here. Again, we'll have to wait for the PA to print before we get some clues, but for right now, I think there is a possibility for us to move up into this box before we do a turnaround and head back down to the invalidation level. The other thing I want to go over here in the count, and I posted it over on X, I'll bring that over real quick, is that the wave 5 and the previous waves have all been the longest wave price-wise. So in the wave 1, wave 5 has been the longest wave. Wave 5 of the 3 has been the longest wave. Is there a rule or guideline on that? Not really. Just some fractal analysis there that there is a potential that that could be a clue, but we'll have to wait and see. Right now, on the volume end of things, we have a decline in volume and a rise in price action, which is not always the greatest thing when you're looking at an impulse. Could signal that it's running out of steam. The other thing is the EWO, and I'll bring this up and blow this up. So when we're looking at the EWO, or the awesome indicator, depending on who you talk to or which indicator you like better, they basically do the same things. But we're going to use the EWO here to confirm or look for more clues or more evidence toward this being a impulsive move. The way we do that with the EWO here, basically in the wave 3, we're looking for the most momentum. It's the swiftest move of the impulse usually, so that's what we're looking for here. We've got that, great. Next up, what we're looking for in the wave 4 here is a dip down in the EWO below the 0 line. So right now we have that as well. We dipped a little bit lower down there. Then for the wave 5, typically what we want to see is a bit of divergence here in momentum. Right now we're not getting that. What we're getting is a flush above that. Again, we really want to see this. We want to see some kind of divergence indicating that the impulse is sputtering out or it's losing momentum. There's a potential for a turn. Again, nothing's going to be 100% all the time. But again, we could be coming close to an end of the trend before we get a little bit of a move back down. In this particular situation, Bitcoin has produced more momentum in the wave, this potential wave 5, than the previous wave 3. What that can indicate is that there's an extension coming in the wave 5, and that could be what's going on now. So that's an interesting thing I was looking at here on the EWO, getting more momentum in the wave 5 than we were in the wave 3, and it's not very typical. As far as the topping indicators here, again, one indicator that we're going to be looking at here is the final channel. We can use the median line or we can use the outer parallel. So we anchor this from the 2 to the 4 off of the 3. Usually what we're looking for is the external parallel up here for it to find resistance at. Again, we can get a throw over. That's a whole nother discussion. But we'll need to see volume pick up the closer we get to that if we do head up there. The other topping indicators that we have are the fibs right here, and then the price action as well. Right now, we still have some distance between most likely target for a wave 5 and the fibs, and some of the channel indicators as well. So that's all that's giving evidence towards or clues toward that we have potential for more of a move up. Another topping pattern that hasn't really happened quite yet, a swift move of equal or greater movement in price. So we haven't gotten that yet either. Thought that was going to happen Sunday potentially, but luckily it got saved and headed up a little bit more. We'll have to dig in and see if we think that's happening as well. So we haven't gotten an official topping break of the wave 4 of the wave 5 at this point either. So there's still some topping indications in the price action that haven't fulfilled yet. And again, this is all adding evidence toward the case that we still have a move up in a wave 5. Nothing's a given ever. So right now, this is my theory. This is what I'm going for. Spoiler alert. So those are my tentative thoughts out here on the weekly. One thing I wanted to talk about here as well is the idea of proportionality in the markets. Right now, this is hitting the eye pretty good overall. But I wanted to discuss what I look for ideally in a wave count. So right now, according to the guideline on the right, look, there's certain things we should be looking for. Certain waves should play out a certain way. There should be certain proportionality in time and in price so that the Elliott wave or the pattern that you're playing is going to look ideal. I'm going to go ahead and steal some other people's terminology for this because I just can't think of anything witty off the top of my head right now. One thing I'm not a big fan of is big wave 2s, small wave 4s. These patterns, though they could possibly play out, I don't think this is the ideal setup. And I think this is a situation where the degree is being miscounted or something else is going on. Of course, this could play out perfectly just as the impulse wave should, and everything just works out great, and I miss this whole move. But personally, what I look for is proportionality between the 2 and 4. Having a fat 2 and a small 4 is something I don't like to entertain until it's too late, to be honest. especially on the hard right edge. If I see this set up on the hard right edge, I'm going to be looking for the wave 4 play as support. The other unproportionate one is called being top heavy. So that's when you have a super small wave 2 and then a huge wave 4. So that's another thing that I don't really like to look for on the hard right edge. I think this would be a matter of degree inaccuracy potentially. Again, do some impulse waves produce this kind of look? Yeah, potentially. And it could all play out and I miss out, and it is what it is. But when I'm looking for ideal setups, especially on the hard right edge, I'm looking for most likely targets, proportionality, all my markers to hit that the Elliott Wave Theory provides before I consider taking a trade or trying to anticipate what the next move will be. So with all those words being said, again, I will go back to Bitcoin here at the larger degree, and that kind of plays into this whole move up as well. If we look at this move, yes, you can count 5 waves up and done. And I've seen a lot of people post that, well, it's 5 waves, it's done. Of course, yes, that's the potential. Even at the smaller degree, we have what we need to say that the impulsive move is done. That's why I was saying, earlier on, we like to play the conservative. If you're a conservative trader or a conservative investor, you have to ask yourself if this is good enough. Even at the smaller degree, we essentially have all components that we need to have 5 waves up and done here. We have a swift move ups, a nice separation between the 2 and the 4, and then we have a little poke above here. But again, are we counting for all the degrees? Have all the 2s been offsets in wave 4s? And that's something I want to look at here. I don't think we have. I've been wrong plenty of times, and if it fails, I'll be happy to readjust and I'll be able to adapt to the new market trend and be able to ride it out and figure things out. But for right now, I wanted to look at this with how we are proportionate in time. This is another interesting thing. So I'm going to use the fib time. Usually when I'm looking for a wave 4 between the wave 2 and the wave 4, there's a couple ways to do it. You can do it with channels, which is played out just fine. So one tool that I'm going to use besides the channels is going to be the time fibs. First thing I want to just check out is the length of the wave 2 here, which is a flat. Usually flats and sideways corrections last a little bit longer than sharp moves because they're trying to take up time. So we might get a little bit less here because of the situation between the 2 and the 4. And as you can see here, we got pretty close. We didn't quite nail the 1. Usually, typically, you want to get at least 1 to 1 between the wave 2 and the wave 4 in length of time. I think because we have a flat in the 2, things are off a little bit. But as you can see here, depending on where you count your wave 4, we land within that range. So I think that looks nice and good to the eye and proportionate. And just to keep going, everything here lands right where it should be. So if you take the wave 3, put it up here at the wave 4, where I have the wave 4, again, you might have it at a different spot, but you'll just have to adjust it for yourself. But right now, we're just hitting into the 1-to-1 ratio. I'm going to go ahead and put all these on here so you can see. Okay, that hits the 1-to-1 within the range here. Hits the 3 right in that range. 3 gets a little bit past the wave 4, so, and depending on where you count it, it might hit in there. So you can see that things are proportionate, moving up nicely. It's got the right look. Everything looks pretty good. So I just wanted to go through that before we dive in a little bit deeper, and let's do that now. All right, here we are down on the daily. I think this is a pretty clear picture here for the waves. We could dig down deeper, but I think it might muddy things up a bit without it looking muddy as hell up here already. But the main thing I want to look at here is by using this wave 3 or this swift move as our anchor here, again, adding credence to it by looking at the EWO here. We have the swiftest move up here in the 3. We have typical wave 3 action here in the impulse, the quickest move, biggest gap between the corrections. So by using this as our anchor, we can build off of the count from there. Since we do, again, have all this past PA and hindsight, we can use this to build our case as to where we think we are in this count. For now, just looking at this basically as we would in an impulse, what are we actually looking at here if we get rid of all this? So with all this count, everything, what are we looking at here on the naked chart? We're looking for a swift move up, sideways action, and then what are we looking for usually after a sideways action like this? Another move up. This movement up has been a little more typical. We have sharp corrections pointing down, and we have the swift moves pointing up, which is pretty typical for what you want to see in the PA. And I can give you a hint. So you can see we got a three-wave move down and move up, impulsive move up. As long as that keeps heading up, then the trend is intact. Over here, it gets a little questionable. Right now, again, looking at the naked chart, does this look like it's done to you? Or does it look like there's potential for a move up? The scary thing or the questionable thing here, and I get it, and that's what I'm dealing with right now too, is this swift move up here. Is this the end of it? Is that part of the correction, or is that a wave 5? So it is warranted that we have concerns up here. So with all those words, the big question is, what do you think this is? If you think this whole thing's a corrective, we have to start looking back to our account and using our anchor here in the wave 3 and offsetting the wave 4s and the wave 2s to see where we are in the offset. So the way I like to do this, you can either do it by looking at it, but to make it more visual for everyone, I'm going to use a little box here. So 2, 4, I think these are good for offsetting each other. This 2 and this 4, I think looks pretty good for an offset. I could dig in there and try and do the fibs, but for the sake of the time, I think this looks like it could offset each other, and this would make one complete degree of an impulse wave, hence the labeling. And then I think this right here offsets this very well. So if you think the top is in, I think you have a pretty good case that this 4 was the last correction before the last leg up, and now we're rolling over. Again, it all depends on your countdown. You have a 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5, and that's it. The way we're going to know for sure that that's a potential is if this level down here at 89 breaks. That's the low that we are going to see, that if this impulsive move up breaks, that could potentially mean that that's the end of this impulse. When you break the wave 4, that means the wave 5 is done moving up, and that there's a potential that you're going to get a deeper retracement past the wave 4 orthodox end. So that this is the level right here that we want to keep an eye on if we think that this is the count right here. 1, 2, 3, 4, 5. Again, we've hit a lot of things in here. The wave 4 most likely targets, they're the fibs and all that, but usually they find support on the 4s of lesser degrees. So reading here, the primary guideline is that the corrections, especially when they themselves are waves 4, tend to register their maximum retracement within the span of travel of the previous 4th wave of one lesser degree, most commonly near the level of its terminus. So again, if I think this is the wave 4, I'm going to go to the bottom of the wave 4, and that's going to be the line in the sand, or where I think there's a potential for some support there when the larger degree comes back to retest the area. So that's why this area is kind of key and clutch. Again, we can use our fibs. So the comparable fib for this degree, we pull it off the 2 and go to the 3 up here, and then we'll go wave 4. So another common fib retracement for the wave 4 is between the 3A2 and the 0.5. Again, you can go 2, 3, 6, but the limit when things start getting weird is the 50. Okay, so that's another reason that this area is kind of huge for me as well. If we lose that, we're either donezo or we're coming in for a larger degree correction, and that could play out. That's kind of the line in the sand for me, where I think there's a potential for us to be done. But if we end up breaking this, and when I say break, I mean we bust through this and then we come back and we check it and do a retest before we move further down, then there might be an issue. If we end up coming down, a little breach or a little poke through and then immediate back in is okay. So that could still happen. We could still breach 89 or the 90K that I was talking about on X. But the real line right here for me is 85, and that's kind of where I start thinking, things aren't going so great for the bulls. And that brings me to the next thing I'm seeing in here. I'll just go over that real quick. So right now we can see in here, we got bonding wedge formation. Basically what this is telling me is that if anyone tried to play these breakouts, they got toasted or they got cooked. Same thing with up here. We got a little poke above and immediately dropped back in. Anybody that tried to play the breakout got annihilated and got stopped out. And that's what's been going on, and that's what you expect in a wave 4. Wave 4s are going to be, you're hoping for some kind of correction where that primary actionary wave is the end of the correction. and then it can do whatever it wants. Who cares? It can do something like this and then head up. That's the ideal situation. But wave fours can be messy. It can it can pierce the high, it can pierce the low, and still be valid and okay. Again, the primary invalidation would be the end of the wave four of the last degree. So right now, if you have this as your count, this is going to be the key level you have to watch. After that, you're either going to have to reconsider your count, or you're thinking that it's over and we're heading down for a larger correction at the minimum. If we end up breaking that, I think we're getting too big for this other stuff. So, if this starts to turn into some big wave four, how long are we going to let that go before we start, raising our eyebrow and saying, okay, that's big for that wave two, it's big for that wave two. How far are we going to let this thing go before we start considering either one, it's a larger degree correction, we're done and we're heading up. So maybe this is a complete impulse. We're doing one of these and we're heading up, or was that it and we're heading down? So these are the kind of questions I'm asking right now is where do I think we are in this wave four situation? Of course, back at the beginning of this move, using again this move up as our anchor, we had a consideration because of all this stuff down here that we're going to be putting in some sideways fours for a while, or some wave fours, and we're going to be heading sideways for quite a while to offset all these different potential wave twos. And that's what happened. So right now it's a matter of waiting for this range to break, in my opinion. We've peaked the high, we've peaked the low, we've stopped everybody out both ways. We're sweeping all these levels of liquidity. Question is, which level are they sweeping before they make the decision on which direction they're going to move? Everyone here, they all probably bought the breakdown, and guess what? They got stopped out. Everyone here, potentially it's inside the range, but if they try to buy the breakout and play the breakout, they got toasted. That's why at TDU and me personally, we all like to do internal or retracement trading. We wait for it to come back to us instead of trying to chase after it. And I've honestly, this is my first lesson, was trying to anticipate breakouts and just getting smacked down, and I stopped doing that so much. Even if we want to look down at the EWO here, we can see that it looks like it's a completed impulse as well. We've completed every indication that we need. We had the most momentum in the wave three. We got a deviation in a move that went to higher in price. So using these indicators, I can see why someone would call the top here. And I get it. I've taken measures to prevent or to protect me. And that's something you can always do. If you're not sure of a count, guess what? The markets doesn't control you. You can do whatever you want. So if you're nervous that this is the top, then you can get out. You can take a position to hedge. You can do a whole bunch of things to offset the damage that could happen without missing out on what could happen the other direction. So with all that being said, is the top in? There's a potential it could be in. There's a potential it cannot be in. So whereas, again, my line is down here. If we sweep this and come back, I'm still okay. If we start breaking down, that'd be a no-no for me. And then I'm starting to look at this level to short right here. It's played a support several times there. So again, that's going to be the main level I use to play off of if we get any kind of corrective move back to it after breaking the low. Right now, again, on Twitter and in the Discord and all that stuff, we're watching this level here. 99,000's played as resistance and support so many times. And that's going to be kind of the main level that the bulls have to break above to convince anybody that we're moving up. So that's the doom and gloom count. Again, I'm still holding on that we have a little bit more up. Typically, we have a most likely target given to the wave 5. We have the minimum here. We have the 5 waves that we need for this to be completed, but it's not typical. Typically, we don't just poke above and then go. If something happens, usually if it's a poke above, it's something corrective. So I still think that there is a possibility that we could be moving up. It's all about these levels that I spoke about before. So depending on where your count is, I would say start considering how big you're going to let this move get before you either relent and say the top is in, or you start looking for other possibility. So the other option, and what I'm going off, I'm kind of converting here and saying that if we're done, if we start moving down, this would be my orthodox end of the wave 4. And then we'd have to figure out exactly what that was. A lot of times in crypto, when you get these swift move down, everything's just so reactive that it pushes way further than it normally would because of all the leverage and everything. So you get these crypto truncations where this is the actual orthodox end of the wave, and then we move up from there and never go past the low of this wick because it was so forceful in this dump. So the other option, again, I would say is to move this over here. This is the orthodox end of the wave 4, and then we could add another degree. We're still looking for proof of this to be playing out, but I think this would allow for more sideways. So if we end up going sideways some more, I would revert to this as the larger degree count and use that as my primary. And for this to play, and for this larger degree, again, we still have all this room that we could go sideways. So down here on the 1 hour, what we're looking at here is a sideways range. Ranges are going to have to break one way or another eventually, and that's going to be the deciding factor on who's right and who's wrong in this whole situation, the bulls or the bears. Putting the channel there, you can see that we've been bouncing off the median line and bouncing off the parallels, the outer parallels, for the last couple months. So conservatively, you can try and diddle in the middle and play these breaks and these supports here in the middle of the channel. Or if you're conservative and don't have any long-term investment and don't care and just looking to trade, we're looking for this break and then some kind of correction below it, either 2 or just below it like that for a move down. Conversely, move up level here is at 106 or 108. Conversely, eventually one of these tests, either up or down, we're going to have to break this thing, go above it, potentially come back, correct it to it or correct above it, and continue up. So conservative play right now for me, and where I'm going to go a little bit bigger than I am right now. Instead of playing all this fun stuff in here, I'm going to wait for a break of this range in either direction. And as soon as that breaks up, even if it goes up and I miss out, still going to wait for a correction and look for that move. As we've seen in the past, breakout traders have gotten smoked if they try to anticipate the break. Now, having this area tested so much, again, that could be a good thing, that could be a bad thing. It means it's holding or it's getting tired. So if we do break this, looks like all the stops have already been triggered here. So we're just looking for liquidity down here to get eaten up if it ends up moving down there. But having it tested so many times and holding is a sign of strength. But another trader is going to say it's a sign of weakness because every time it gets touched, that's more buyers that are getting knocked out. So overall, in the short term, to wrap this whole thing up here, we're waiting for this pivot to hold to see if it's going to hold. If it doesn't hold, then I think we have to start considering that we're either done with this move up or we're going for a deeper retracement. Because again, breaking the wave 4 of the same degree indicates that the impulse of that degree is done and that we're potentially going in for some kind of larger correction. So like I was saying on the larger count here, we're still watching this 99K, which has been just knocking price down over and over again here. You can see that it has knocked it down all the way back here, flipped to support. I think I went through this before in one of my earlier videos, but this is played as support and resistance all the way through here. And right now it's playing as heavy resistance. So that's the main level right now for the bulls. Break above that. We can hold the golden zone here and start heading up. I think that would definitely be a show of strength on the bull side. Getting lower than that, things start getting a little bit iffy. Really don't want to see us coming into here. If we stay correctively, that's fine. We get nice and ugly and keep going down, okay? Well, we really need to start seeing these lower highs and lower lows convert into and be flipped into higher highs and higher lows before we start digging our way out. And 99,000 is going to be the main level here at this degree. So regardless of the count in here, again, if we can hold this golden zone, hold this level, and bounce up above 99, I think we might have a chance to dig our way out. We can always head back into this count and try and figure out exactly what was going on in hindsight, where the counts are always easier to figure out. All right, so if you listen to me ramble this long, thanks for watching the video. Hope you learned something new at least. Take it back to your account, take a look around, see if you are convinced of your wave 4s and wave 2s, and see how long you're allowing this to go sideways before you consider that something else is going on besides, your smaller degree count. Thanks again for watching. Let me know what you guys think in the comments below.